Everyone, and I mean everyone, is trying to find the next Nvidia. Tesla bulls, of course, believe it could be physical AI, and SpaceX investors believe that this could be the largest IPO in decades. Marvel bulls believe it's the next AI infrastructure giant. Palantir bulls believe that it could become the next operating system for enterprise AI. But there's a problem. When everyone is chasing the exact same future, well, then there are many stocks that are going to get priced like winners before they have ever proven anything. Now in this video, we're going to talk about everything. The SpaceX IPO, who is the next leader of AI, and what does that actually include? You're going to get my personal opinion and know exactly what to expect moving forward. The market, unlike before, is no longer asking who's an AI company. It is now asking who's the next Nvidia. So if we take a look at Nvidia, they have obviously seen explosive growth, right? And this is the chart that we all know. In 2022, they did something. In fact, they made an entire pivot within their company. And that singular pivot caused Nvidia to go from a $60.9 billion market cap in 2024 to $130.5 billion of market cap in 2025. Now, the core problem, which I've already mentioned, is the fact that everyone is trying to chase the exact same type of winner. And so that means a lot of companies are now going to start getting value just like Nvidia before they've actually proven anything that's, even remotely close to what Nvidia has. You see, Nvidia did not explode, let's see, dating back from 2022 till now, over 1,300% just because they were AI. Now, it's not the first time that we've seen something like this, where everyone is trying to become the next something, and in 2020, that was Tesla. In 2020, 2021, Nikola became one of the most hyped EV companies because investors were looking for the next Tesla. And so when a narrative becomes hot, like EVs were back then and like AI is now, investors do not only buy the winner, which in the AI case would be Nvidia, they also try and look for copycats or companies that remind them a lot of that hot narrative. So in 2021, that was Nikola, which again was sort of a copycat of Tesla. It initially, did well, right? It got a lot of traction. Everyone was interested in it, but because the expectations were Tesla level, well, then again, later on, it just disappointed tremendously. And now, well, again, the stock is pretty much trading at zero. And if we now compare that to the actual winner, which again is Tesla, well, then we can see a night and day difference. Now, as I said, Nvidia did not only go parabolic because of the AI narrative, but because the numbers were actually real. It's also why a lot of people are now comparing what we're seeing within Tesla to Nvidia, because Tesla is again trying to merge into the AI sector, but more so in the physical AI. And when I say the numbers were real for Nvidia, I mean it. Let's have a look at a comparison here between Nvidia revenue by segment in 2020 versus 2026. So prior to 2022, which was the year they released the Nvidia H100, Nvidia was primarily a gaming company. You can see that 51% of their revenue was, again, gaming, and only 25% was data centers. Fast forward 6 years, and of course, post-release of the Nvidia H100, you can see a night and day difference, right? Data centers now account for 90% of their total revenue, whereas gaming only accounts for 7%. This is exactly what real platform repricing looks like. The story did not just stay a story, right? It actually showed up in the financials. Now, as I've already mentioned, Tesla is the physical AI bet, and I want to mention what JP Morgan has just said. I also covered this briefly in my previous video. So JP Morgan initially had a Tesla target of about $145, right? And so if we take that from the current price down to $145, well, then you can see that that is about a 62% drop from where we are at now. But as you guys can see, investors are looking beyond Tesla's slowing core electric vehicle business and in fact focusing on future growth opportunities, including robo-taxis, humanoid robots, AI chips, and software services that could reshape the company's earning profile over the next decade. So reflecting this optimism, JP Morgan has hiked its price target on Tesla shares to $475 from $145. That is a significant increase, and the only reason why they have changed their target so drastically is again because Tesla is trying to merge into more of an AI company rather than just an automotive company. And so this is in fact the new Tesla bull case, right? Things like robo-taxis, humanoid robots, AI chips, and software services. And of course, things like energy storage and Optimus, right? These are the things that could in fact bring the majority of the revenue for Tesla in the future. And that's exactly what JP Morgan is betting on. And so the revenue segment for Tesla could in fact start looking more and more like Nvidia, where again, they went from gaming and into data centers. And that's what people are betting on. And that's what Tesla bulls are hoping for. And so I want to make it very clear that investors are not buying Tesla because they hope they're going to sell more vehicles this year and in 2027. Because again, it is very clear that that's not the case, right? If we compare the Toyota versus Tesla car sales in 2025, we can see a night and day difference. So Toyota, they sold 10.5 million vehicles globally, okay? And relative to Tesla, that's extreme because Tesla delivered an estimate of 1.8 to 2 million EVs. So again, not even close. Toyota outsells Tesla by a ratio of roughly 5 to 6 to 1 on a unit by unit basis. So again, it is not because people suddenly expect Tesla to start selling more vehicles, but in fact because they hope that Tesla will successfully be able to pivot away from automotives and more into the AI sector. And you can also see that Tesla is not priced like a regular car company. We just compared the Toyota sales to the Tesla sales, and Toyota won by a mile, yet the PE for Tesla is, remarkably larger than Toyota. So it's sitting at 385. Toyota is sitting at 10. Now, let me tell you this. Again, investors are not paying nearly 400 times earnings because they believe they're going to sell more cars, but in fact, because they hope that the Tesla pivot will be as successful as things like Nvidia or Apple. But this is also where the primary risk lives, because what we're seeing now, right, is not a small valuation. And if we look at the revenue segment by segment for Tesla, we can see that it's still primarily an automotive company. And so the entire debate is whether these future businesses can in fact justify the current massive valuation. And to visualize it for you guys, Nvidia made a pivot again in 2022 and the stock went absolutely vertical. And so Tesla bulls are in fact saying or hoping that Tesla is in the pre-stages of the Nvidia pivot and they are in fact going to replicate sort of what Nvidia did. Because again, we're moving further and further away from GPUs, which was the reason why Nvidia is now the largest company in the entire world, and more towards other things like the infrastructure as a whole and things like physical AI, which again, Tesla could in fact, potentially offer in the future. So again, Nvidia pre the H100 and Tesla pre the robo-taxi and Optimus before they get, commercially meaningful. Now, if you are, within the investment world on social media, whether that's Reddit, Twitter, whatever it might be, you've probably seen the increasing popularity regarding the SpaceX IPO. In fact, I can show it to you. So what we're looking at here is Google Trends, and this essentially measures the amount of Google searches within a specific topic. In this case, SpaceX IPO. And you can see just how vertical this has gone as of recently, now that people are actively talking about it. And for that reason, I'm going to cover it in this video because I know a lot of you out there are probably interested in this IPO as a whole. Should you invest? Should you not? Well, let me start off by saying that SpaceX IPO is expected to fetch a $1.75 trillion valuation. And so SpaceX might actually be the best example of how strong the appetite within this market actually is for futuristic companies. Now, the real argument is the fact that SpaceX, while it may be one of the most important companies on a global scale, it does not automatically mean that the IPO is a good investment at any price. So I actually shared this on my Twitter not too long ago. If you're not following, well then head right over and essentially comparing the SpaceX IPO to the Meta IPO. Again, this is in no way, shape, or form accurate, but it just is a comparison to what happened to Meta. So Meta, or Facebook, IPO'd in 2012, and at the time there was immense hype around their IPO, just like we're seeing today with SpaceX. And so Meta went public at an extreme valuation, and just a few months later, it was actually down 60%. And so if you're asking me whether the SpaceX IPO is worth the investment, I would say no. I would say wait it out, see what happens. I would not invest in the IPO on the day of IPO. I would certainly wait, because what we're seeing now reminds me a lot of what we saw with Meta in 2012. And just to put it into sort of perspective for you guys, here you have the SpaceX IPO valuation against existing companies like Nvidia, Apple, Amazon, Broadcom, and Tesla. So it's not as if SpaceX is going to launch as this fairly small growth stock. In fact, it is expected to launch as one of the largest companies on a global scale at a $1.75 trillion valuation. So for most people, sure, this can be a long-term investment, and whether you invest on the day of IPO or not doesn't, probably isn't that significant if your time horizon is, 50 years. But for most people, you're not going to make, an immense gain on this, just historically speaking, given the initial valuation that is just extreme. Now, let's get to the most important part of this entire video. Now, if you have been following along within the stock market and the AI narrative, well, then you should know, as I've already mentioned, that we are in fact moving away from just being GPUs. Now, Marvel is one of those companies that in fact offer things beyond just GPUs, and that's why there's so much talk around it right now. Now, if we jump to a 4-hour time frame here, you guys can see that the stock in fact crashed, let's see, about 18% in a singular session, the other day. In fact, this was Friday. But prior to that, you can see an immense increase in a relatively short time frame, right? So in just a month or two here, you can see that the stock has in fact gone up over 284%. And what's crazy is the fact that in pretty much a singular session, the stock went up, let's have a look, about 33.9%. Now, the whole reason why it went parabolic in a singular session was because Nvidia's founder, Jensen Huang, said that Marvel is in fact going to be the next trillion-dollar company. Now, the reason why Jensen believes that, and given its current market cap, that's actually quite an increase, is again because the story is no longer just about GPUs. The AI trade is now about the whole stack, right? Not just the accelerator, things like networking, custom silicone, optical infrastructure, data centers, power, memory, cooling. And so these are some of the things that Marvel actually offers. And so if you ask me, well, then that is a pretty good candidate in terms of the next Nvidia in the next phase of AI. So I look at this whole thing as, in phases. So Nvidia won the first phase, which is GPUs. Marvel might win the second phase, where it's more about things like networking, optical infrastructure, data centers, memory, and so on. Phase 3 might be physical AI, and Tesla might win. Who knows, right? But I believe that phase 2 could be dominated by a company like Marvel. And again, when a guy like Jensen comes out and says Marvel is going to be the next trillion-dollar company, it, gives people a lot more faith, given the fact that they're backed by the largest company in the entire world. Because of that comment, by the way, this is also expected to be listed within the S&P 500, which can also be incredibly beneficial, as a lot of people can have indirect exposure. And I just want to show you the narrative explosion, okay? Because it's not as if Marvel just climbed up slowly, right? So if we take a look here, in May of 2025, in fact, all the way up until January of 2026, this was only trading with a market cap of 69 billion. Now, fast forward to today, right, June 7th, well, then now that market cap is looking like 230 billion. That is an immense increase in a very short time frame. Now, there's still danger attached to the AI narrative. I know it doesn't look like it because of how the stock market has been looking recently, but I want to explain it now. So Broadcom actually proved the fact that we are, in fact, not as optimistic about AI as we were before, and it crashed 22% in one day. Now, you might sit at home thinking, well, what the hell caused a stock to crash 22% in a singular day? I mean, what happened? Well, not much, actually. Broadcom just failed to impress the investors, and that is pretty crazy given the fact that their revenue was at $16 billion, and just a year ago, it was at $5.2 billion. But as it says here, the $16 billion was just slightly below Wall Street estimates, and that caused the entire stock to crash. And it, in fact, wasn't the only one, because if we take a look at the semiconductor ETF, you can also see that that crashed 12.6%. And so this is arguably one of the most important parts of this entire video, and it's important that you understand it's not because the market doesn't believe in the AI narrative any longer, it just started questioning its price. This chart shows you what happens when perfection pricing meets a slightly imperfect result. Now, when we're talking about perfection pricing, I think that Palantir is pretty much a prime example of exactly that. Now, don't get me wrong, it's not because I believe that Palantir is a bad company, but because the market is valuing it as if nothing goes wrong, right? It's valuing it as everything is going to go right for Palantir. And yeah, we're talking about the stock that in 2024 went up about 900% and has ever since then been sort of stuck in this smaller consolidation. And the reason why I say this is simple. Have a look at the PE for Palantir versus competitors like ServiceNow, Snowflake, Microsoft, Adobe, Salesforce. It's not even close. In fact, it looks a lot like how Tesla is priced against its competitors. And so Palantir isn't priced like a software, it is essentially priced to never miss. Palantir trades at a multiple no profitable peer comes close to, and at a PE near 217, it's priced as a company that simply cannot fail. Now, not that this matters, but I want to bring it up anyway, and not that you should use this as a reason to either short or long any stock, but Michael Burry, right, the guy that predicted the crash in 2008, is actually short Palantir right now. He's also short Nvidia, Pfizer, and Halliburton, but I'm more interested in the Palantir stock, and to me it makes a lot of sense because also when you look at it from an objective point of view, Palantir looks a lot like certain companies did before the dot-com crash. So again, I'm not saying that Palantir is going to crash, but I am saying it's rarely good for a stock to be priced like nothing goes wrong, because when something inevitably goes wrong, well, then investors will get disappointed and the stock, well, it can look really ugly. So what do we do moving forward? I mean, what do we look for? What's the next move? How do we know what's going to happen? Now, I personally do see Marvel as a great pick. I do see it as sort of necessary, not that other companies can't fill in that gap, but necessary in terms of AI's development. And the fact that Nvidia's founder came out with a $1 trillion target and it's currently trading at a $230 billion market cap leaves a lot of room for growth. But what we should watch moving forward, in my opinion, is Apple and Oracle. Now, the reason why is because Apple and Oracle will tell us whether the AI narrative is broadening or if it's, becoming more narrow, and that's just crucial. Now, Apple's WWDC is upcoming, and this is the annual developer event where Apple announces operating system updates like iOS 27 and maybe even tease future hardware. And so if Apple delivers strong AI features, well, then it might actually become part of this massive AI rally, and vice versa, right? If they disappoint, well, then the Apple is behind AI narrative sort of continues. And again, this Friday, we saw a massive crash within the stock market, trillions of dollars of white in a singular session, and we can see Nvidia down negative 6.2%, while Apple is only down 1.25%. And that is, again, because Nvidia is priced as an AI company and Apple is not. So if they, in fact, do announce some sort of new AI feature, well, then there's a chance that it could start capitalizing on the rewards that you might get from being an AI company. Now, for Oracle specifically, right, we have earning results, which are set to be released on June 10th, 2026. That is 3 days from now, at the time of this recording. Now, the primary thing that I would look for is the OCI growth. If that stays strong, well, then the AI infrastructure thesis continues. And secondly, I would watch the RPO or backlog, because if Oracle's backlog continues to expand, well, then that means customers are still committing serious money to Oracle's AI cloud. And so the earnings on June 10th will essentially tell us whether the AI infrastructure demand is still translating into numbers. And if the Oracle earnings disappoint, well, then the market is going to start questioning whether too much future demand has already been priced in, and that's where things get dangerous. Now, in my opinion, I believe Oracle will do great in terms of earnings, and I actually like Oracle as a whole. I believe it's pretty substantially undervalued relative to its competition, and so I hold shares in Oracle. And of course, I'll continue to hold this, throughout earnings and whatnot. But again, you can make your own decisions. You don't have to listen to me. You don't have to listen to anyone. I'm simply here to spread information. Now, to end it off, I'm going to tell you the biggest mistake I think investors can make right now, and that is simply believing that the most loud or hyped stock is in fact going to be the next Nvidia. That's not necessarily the case. Nvidia only worked because it became a financial reality, not because of hype or how much it was talked about. And so chances are the company that's going to replicate sort of what Nvidia did here in phase 2 of this AI narrative is probably going to be the exact same thing. The narrative essentially turns into revenue, margins, and demand before the market has fully priced it in. And so again, most people are looking for the next Nvidia, but the reality is 98% of them are probably chasing the wrong one to begin with. And so the overall goal is not to buy every AI story. The goal should be to buy companies or stocks where the numbers are actually starting to make sense. So again, ladies and gentlemen, the AI hype or the AI narrative is not at all dead. It is just slightly changing. And I'm going to leave you off with one final warning from me personally, what I think could be a disaster within the stock market. And that is if this AI narrative completely fades before a resolution takes place in the Middle East, because no matter what you say, the current state of the economy is not a state that supports, a stock market at all-time highs week after week. The only reason why that happens is because the AI narrative is so strong, it is essentially winning the competition against oil. But the moment that AI hype fades, well, then the market might be in for a surprise as it realizes what's actually going on beneath the surface. And again, not a definitive outcome. It depends entirely on the resolution in the Middle East. We can actually flip the entire sentiment in a singular headline. Inflation can start coming down, yields can fall, and so can oil. So again, ladies and gentlemen, I appreciate every single one of you for watching this video. Let me know in the comment section down below what stocks you're watching. What do you believe is going to be the next hot AI story? And again, as always, prioritize your risk. Don't jump in just because everyone else is. I appreciate every single one of you, and I hope to see you in our next video.